So today's video, we're going to be talking about a topic that I've been getting plenty of questions on, and that's how do I build a new construction home on my own land from the ground up. I have Jay Ingram here. The last time we met, we was at America's Home Place. And he actually was doing a lunch and learn for realtors on this very topic. That's been what?
That's been at least 7.
At least 7
years, yeah.
But you've been in the business about 18 plus years now?
It's going on 20 this year. Going on 20 this year. So December of 2005. And actually I got in the business in Georgia. So I wasn't even in South Carolina when I started this crazy business that we're in. It's also very fun. But yeah, it's
well, you got
quite
a baby face. You telling your age now. You don't look that old.
I don't know about the baby face. But.
Well, I remember that I learned a lot that day, but I can imagine over the years things may have changed. So maybe you can clear up some questions and help some of our viewers answer some questions about how can they build a home on their own lot.
That's becoming definitely, I think people are starting to ask that question more, like you said earlier, just because you want a specific certain thing in your house, and maybe the builders that are doing that is not putting the things that you might want. And then existing homes, you may not want to go out and do a renovation project. You know, you might want to just, hey, this is what I want in my house, and so it'd be nice to kind of build it from the ground up and customize it however you want it.
I don't know. I mean, I can't imagine living through that. That's just seems like a little bit of work.
It's just a tad bit.
It could be worth it though. It could definitely be worth it.
The finished project, the finished price. I can't even think of the word I'm trying to say right now. But hey, the finished product is actually what I was trying to say. Couldn't get it out. I know it's running from me. Yeah. But the finished product is where it's at. I mean, you know, it's kind of like when we go through our transition with a buyer from the beginning, and then when they get to the end and they close, there's a process that happens. And it's a beautiful thing when you take somebody that maybe it's their first time, they don't know much about the process at all. You get them to the closing table and you see the transition. So it's, you know, it's the same thing.
It's always happy, smiling faces, no matter what you went through to get there.
Because we know it ain't all ice cream and cake, as they say, during the whole process. It ain't always that way. But
I think for most people, the desire to build on their own land is just to have land and space, because with these new builders, even if you go to new construction, it's just like
everybody's on top of each other. I mean, you got one house here. You can basically, your house is so close that I can hear what's going on in your house next door. So if you got just a little bit of music on, I can hear you. I can hear. I can pretty much have a dance. I can have a dance party at my house. And listen to your music.
Like, let's share the DJ.
Yeah, exactly. We just pay them one price and we get to double the fun over here.
That's funny. So, first question: is the loan product or the loan process the same as if I go to the builder and buy a new home there? Like, what does my score have to look like?
Right. So that's a good question. And that's usually one of the first questions that comes up, because everybody wants to know, man, what kind of score do I need to have? Because that's obviously, we always start with the credit score, right? We always start there. So
you gotta get your foot in the door.
Yeah, you got to get your foot in the door. But the scores right now for new construction, 620. For existing homes, or I won't say existing homes, but if you're looking at FHA, VA conventional on an existing home, those scores can go as low as 500. However, there's a lot of requirements at that 500. You're talking having more money down at that point. There's probably going to be a lot of explanations and all that stuff to go with it. But that is, you can go down to 500. What I see most of the time is probably going to be 620 and up. So when you're looking at scores, construction 620. However, there's going to probably be a lot more restrictions on you at 620 than it is at a 680 or 700. So that's just something to keep in mind.
So either way it goes, the higher the score, the better the process, or the better the terms.
Right. The interest rates are going to be better with higher scores. And just overall, I think you're going to have a better deal term-wise.
You're throwing around 500. Call him.
No, don't call me. I'm going to tell him to call you. I'm going to tell him, hey, you need to call Alicia. She can take care of that for you.
But it's possible. But it's possible. It could take a lot more steps and process.
And to be quite frank with those, it is tough to get a deal at 500, right? I mean, it really is. There's got to be a lot of extenuating circumstances going on. There's got to be some things that you can document, you can prove. I'll give you an example, a job loss or something like that, where it's you could see, man, everything was perfect before that job loss. And then job loss happens, and then you got a span of a year of like everything just kind of went down, or you're in the hospital. So it's got to be something that you can really kind of, I don't want to say paint the picture, but you got to be able to really explain it, and you got to be able to document it, not just explain it, because anybody can say anything, right? But if you can't document it, so yes.
So how much money do I need down? So that's the next question. Like,
how much money you gotta have?
I gotta.
Well, you got to pull out the checkbook on the construction loan. We need the checkbook to come to the table. But no, seriously, on that, I mean, you're looking at anywhere from 20% down, and then 20, 25%. Obviously, you can put down more if you want. When you're dealing with existing homes, I mean, it's going to be less money, right? Some of that depends on how much you want to put down there. But we're talking minimums on an FHA loan. It's 3.5%. Conventional loan, you're looking at anywhere from 5% and up. And a VA, you're looking at 100%. You can do 100% on those.
Right.
So I think when you look at the construction side of it, the construction side is obviously going to be more money down, right? Because you got, if you don't have the land, if you got to go get the land, and then you got the build, you got all these materials, you got so many other components to building a house that you got to have some, as I say, skin in the game, because nobody's going to give you 100% of the money to go build. Yeah, so you got to have some skin in the game. And that just means that you got to have some money invested.
Now, if I'm a first-time buyer, can I do down payment assistance with construction?
I'm gonna have to pass that one on to the next person because I don't know the answer to that one.
That is fine.
But I'll be honest with you, I've not encountered that. I'm the type of person that if I don't know, I'm gonna tell you I don't know. And I truly don't know if there's a down payment assistance. But the one thing is I'm very resourceful. So if it is out there, we'll find out. Yeah, we'll find out. We will find out. So, but I've not had or encountered that. But I do know that the chances of it being is probably slim. And I
figured so. I just figured I'd just ask the
put
question.
It out there. Yeah, because you never know. Somebody's probably
ask.
thinking about that. Yeah, somebody's thinking about that question. So just put it out there.
So how about if I have my own land? My grandmother left me some land and I want to use that land. Can I use that land as the down payment?
Yeah, so that's another good question because you have a lot of people, especially heirs property, and their grandparents or their parents left them some land or left some houses and stuff like that. And so the cool thing about that is with the land, especially if it's paid off, it can be rolled into the actual structure, so to speak, of the construction loan. And so it gives you equity, and I won't say equity because equity is a little bit different, but it basically gives you somewhat the capital that you need. You may not have the full 20% for the down payment, but if you've got the land, now that land, and say that land's worth 100, you're buying 500, well, that's 20%. Right? So that can roll into the cost for your transaction versus you having to try to come up with all of it out of pocket or out of savings or, using 401k or something like that.
Okay. So that can soften the blow of how much I need to come to the table with.
Definitely makes life a little bit easier, just a little bit.
Gotcha. Okay. So how about the builder part? So we got a builder. How about my uncle? He's a contractor. He built their family home.
Uncle Joe? Yeah, Uncle Joe.
Get my uncle to build my house.
So let's see. Uncle Joe don't want to be coming over here trying to build no house, okay? But no, Uncle Joe, so this is the other part of construction that's different than existing. And in existing, you don't have to worry about contractors. You don't have to worry about licensing and all of this other stuff. When you're doing a construction loan, the builder has to be licensed, right? They've got to go through a whole checklist of things that the lender that's giving them money wants to see, because you're going to have draws that you have to give them at different stages of the process and the progress of that build. So there are going to have to be some things that will hold them accountable, right? So if they don't do a good job, they got to be held accountable. So licensing, insurance. I mean, so there's some things that they've got to do before they can just come in and say, I'm gonna build this. I'm gonna build a $1 million house, but I don't know the first thing about building, but I'm gonna build you one. So yeah,
that's fair.
Yeah, and honestly, as a client, I would want that. If I were on the other end of that transaction, I wouldn't want somebody to just come in and build a house and they have no idea what they're doing. I would prefer somebody that's probably got some experience, somebody that's done this before, and they're licensed. So I know that, hey, if you don't do it right, I'm going to be taken care of because you got insurance and all the other stuff.
We're going to court.
We're going somewhere.
I'm gonna have to take my Uncle Joe to
Yeah,
court.
you don't want to take Uncle Joe. Leave Uncle Joe alone. Uncle Joe don't want to go to court. He just want his money. That's all.
Like, why y'all family feud about?
No.
But,
Don't get Uncle Joe to your house. Leave the family out of it.
So you mentioned draws. What does that mean? That sounds like, would I have payments after they took the first draw, or is it like a one-time close where I just start payments after the construction?
Right, so that can be very, very complicated to explain. So I won't go into that a whole lot. But just know that the draws are done based on the certain stages of work that's been done. So they may say, hey, the project's gonna take $500,000. Well, you may have 3 or 4 draws through that process. So you might only get like $100,000 to do this or $200 to do that, so that they can keep the project moving forward. But a lot of times you will have to have some money up front to get the project going, because they may not give you $200,000 to go do it. Get materials, get permits, and all the other stuff that you got to get. And obviously that's going to be on the builder, because that's why you hire a builder to do this instead of doing it yourself. Okay. So the builder, they may say, hey, I'll take $50,000 or $60,000. And they'll probably roll it up into their costs or what it's going to take to build a house. Because I have one I was doing out of Atlanta, but with that one, the builder was kind of different on how they handled the fees. And so that's why it's important for us to get all the stuff up front. Because before you even submit all of the permits, you got to go through a process of getting all the costs down. You got to go, it's a cost check. Oh yeah, everything's itemized. So when you start building, okay, it's going to cost this amount to build. Now you might be off just a little bit, but it won't be a $300,000-$400,000 difference because you didn't do any of the costs up front.
So once we pick out those plans and those products, we need to stick with it, because we got to change the budget.
Yeah, but you take the time to do that here, so you're not doing that back here. Because if you're doing it back here, it's going to blow everything up.
You might be talking a little bit of Greek.
Yeah.
So not too in-depth, but in simple terms, tell us, what does a draw mean?
So a draw just means that the money that's being held from your loan is provided to the builder for them to continue to do work on your home. That's pretty much all a draw is. It sounds cool, but it's really just very simple. It's just money being held in escrow by the attorney, and that money is released to the builder to do work. And then what they do before they release that money, they have certain inspections that's got to be done and make sure they're approved before the next round of money is released to go out and do the next stages. Next stages of the project.
Okay.
Yeah.
So revisit one more time just to make sure that everyone understood. One-time close. I start construction. We got the loan approved. We're moving forward. We close on the property up front. When is my first payment due?
That's a very good question. Normally it's 45 days after the close, but I would tell you just the one-time piece is important, because you don't have to do another loan or have to refinance out of the construction loan, and it saves you a lot of money, because if you end up doing 2 loans, it's 2 sets of closings, and it's 2 sets of closing costs. So you end up paying more money when you do a 2-time close versus a 1-time.
Okay, so my home is finished, 40 days, I start payments.
Roughly 45. Honestly, it's almost just like the existing home. So you buy a house, you close in, say, March, you have a payment in May. That's usually how it works. Because if you close, like say you close March the 15th, you're going to have a payment May the 1st. And payments always due on the 1st.
So I got to have somewhere to stay.
You got to have somewhere to stay.
I got to pay for 2 houses. Or I got to pay a house and a rent.
No, because you're moving in March. Yeah. If you're done.
In 45 days?
Yeah, if you're done.
Okay,
You're talking about when it's done, when it's complete, right?
When it's complete.
Yeah, when it's complete and everything is done.
So I'm talking about during the construction process.
Oh yeah, in the construction process, you got to have a
So I don't have a payment.
You have interest only. Again, every lender is different. So some of them do interest only and payments through that process. And so some of that is put into your closing sheet. So when you do the initial closing sheet, it's going to see how much those payments are. Right, and that closing sheet is basically your cost for doing a construction loan, and those costs are included, so you don't have a payment, but it's financing, right? Because that's money that's being used for that as well.
So I'm sure there's someone out there that's going to want you to break this down to them.
Yeah. I'm prepared for that. Yeah.
Tell us how to get in contact.
All right. So again, I'm Jay Ingram. I'm with Home Loans Inc. right here in Charleston, South Carolina, serving Georgia, Florida, and South Carolina. Best way to get in touch with me is cell phone. It's 843-714-5195, and email address is jay@homeloansinc.com. And I look forward to hearing from you.
Absolutely. Also, you know how to hit me up. I have my link in the comments. Book a consultation. We'll make sure to help you get started with that process if that's something looking to do. If you have a home-based service business and you would like to schedule an interview and be highlighted in our monthly newsletter, please reach out so that we can get you on schedule. Thanks for watching, you guys. I hope this video was helpful. Hit
Awesome.
like, hit share.
Let's get it.
Thank you.